Hey guys, what is going on? Welcome back to my Robinhood portfolio. Hope you guys are having an awesome, relaxing weekend. What I thought I'd do today is talk a bit more about a video I put out a few weeks ago, actually a few days ago if I remember correctly, about a video entitled Fool's Gold, essentially talking about the risk associated with very high dividend stocks, especially closed-end funds with dividend yields of 10, 15, or greater percent. I have one here, PHK, PIMCO High Income Fund. You can see on the bottom here it has a dividend yield of 12.586%. And for a lot of investors, especially new investors, these seem like very attractive investments. Not only do they have a great dividend yield, but they also have great capital appreciation as well. You can see this fund here is up 46.85%. And yes, it's been quite volatile, but it's still up quite a bit of percent in context of this large dividend yield as well. So very, very attractive to investors. But unfortunately, a lot of these funds have some underlying dangers that may not be obvious or may be masked by those high yields, both capital appreciation wise as well as dividend yield wise. So I kind of wanted to go through some of the things an investor should look at when investing in these types of funds. And a good example of some of the dangers are illustrated in this closed-end fund here, PHK. This is a fund started in, I think, 2003. It's essentially a portfolio of investments. For this one here, bonds, that really looks to produce for the holder, the investor, capital appreciation through investments in corporate debt obligations. For this fund here, it's bonds, but it can be any asset or any income-producing security. For this particular portfolio of investments, it has essentially bonds in its asset holdings, corporate bonds about 50%, as well as some asset-backed bonds about 27%, municipal bonds about 13%, and government bonds about 5%. And then there's some other income producing securities as well. But the big thing to take away from this is that it's a portfolio of different investments that have an intrinsic value or a net asset value, NAV. And for this particular fund, it's about $6.30 or so. And you can see it's trading at $9.88. So if you buy the stock that's openly traded on the stock market, you're essentially buying something that's worth about $6.40 or so. So you're paying a premium of 40%. And in the recent past here, it's been trading at a premium of 50%. So essentially, you're buying a company, if you will, that is a lot cheaper than what it's priced at. So this income fund, again, is just a collection of bonds that produce income. But if you were to take the value of all of those, it's a lot less than what this stock trades for. So this stock trades for a very high premium on the stock market. So this company were to liquidate all of its assets, for each share of stock, an investor would only get back about $6 and some cents. So you'd be losing quite a bit of money. So you need to really take a look at that when buying these particular types of funds. And the other type of danger is the danger in its dividend yield. So for this particular fund here, it's had a dividend yield since its inception, but since 2015, the end of 2015, it's essentially been returning some of its capital to make up for the dividend. So before 2015, all its dividend distributions were from income that the fund made. So from the bonds and other income producing securities, each month that income would be sent back to the investor in the form of a dividend, but it's all income investment. But since 2015, the income has not been able to essentially account for that entire dividend. So it's been essentially giving back the investor its own money. It's been taking money, selling off some of its assets, and using those funds to essentially produce the dividend. And it's also decreased its dividend. In July of 2015, it was 0.1219 cents per share for dividend per month. Now it's 0.1035. And from that dividend, the return of capital has been 0.04. So out of the 0.10, 0.04 is return of capital. So it's essentially taking away from the company and giving back to the investor because it's not able to give that dividend in the form of income because the fund just hasn't been producing well. So for both the premium as well as the return of capital, this fund is very, very risky. So essentially you're paying a very high premium much more than what the stock assets are worth, and then you're also getting a dividend distribution back. Essentially, that is your own money. It's basically taking money from the fund and giving right back to you because the income it's producing isn't able to make up for that entire dividend. So for both of those reasons, this is a very, very risky play. So the risk would be either the price drops down quite dramatically, which you can see here. This has happened in the past here. Down, essentially down to its net asset value here, down to $6.32. And then it's really skyrocketed up here. So very, very risky. It's skyrocketing up again here, as you can see. And then also, as it returns capital to the investor, it also erodes the net asset value. So this number here is going to get even lower and lower. So a couple of things to take a look at when getting into these type of funds. So again, the net asset value and whether they trade at a premium or a discount. Some of these funds actually trade at a discount and would be great investments. And then also take a look at the distribution of its dividend and take a look to see if there's any return of capital. If there's return of capital, the fund is not doing well, and the risk would be either eliminating or reducing that dividend distribution, or essentially the fund goes bankrupt because it just isn't able to produce an income. So hopefully those points make sense to you guys. If you guys have any questions about that, let me know. But just wanted to highlight some of the risks associated with these very high dividend yielding closed-end funds, especially those funds that have portfolio values that are a lot less than what the stock or security trades for on the stock market. So yeah, hopefully you guys have understood a little bit of beyond that description. It gets very complicated. I kind of touched on some of the most basic elements of taking a look at these funds, the net asset value and whether it trades at a premium or a discount, and then also if the dividend distribution is simply from income or if there's some return of capital in that as well. So if you guys have any questions, let me know. If I didn't say anything entirely correct for investors have maybe a little bit more background in some of these funds, let me know as well. Always looking to learn and improve my knowledge base. So kind of with that, I'll end the video here. As always, if you enjoy my videos, feel free to like, share, and subscribe. The whole point of these videos is to learn about the market for not only myself, but for you guys as well. If you guys have any questions about anything I discussed here, let me know. Any good video ideas, let me know. Any good trading strategies or good stocks to add to my portfolio, let me know as well. Always interested. So kind of with that, I'll end the video, and we'll see you guys later.